shoot. Perfect. I have my volume turned off on the recording. You know, we might just revisit this whole thing. Yeah, I think I'm going to basically go over this again. Maybe I'll just do it like by myself on like Saturday or Sunday and just record it and upload it as session 4 on YouTube and just delete this one because my volume was turned off the entire time. So nobody's going to be able to rewatch it. What a bummer. But it's also kind of good because I don't feel like... Basically, I don't know what's going on with me right now, but I don't feel like I'm really firing on all cylinders, if that makes sense. But anyway, let's just keep talking about our TPO. Basically, there's a few things that we're looking at. We want to be on regular trading hours, no matter what we're looking at. If we're looking at SPY, ES, futures, whatever, it doesn't matter. We're always going to be on regular trading hours. Our single prints is when we have an area. So like, again, 30-minute period, 30-minute period. This would be the C period, 30 minutes. And on this C period, we had time where there's no other block overlapping this, right? So here, the C period is all by itself down at these levels, which would mean that these are single prints. We came down and got a strong reaction and bounced. And basically the theory is when we come back to this level, we would expect another strong bounce, right? So this is just basically like our strong low or strong highs. Up here at the top, we have a strong high. It's not as strong as the bottom, but where we have 3 blocks that are on their own up at the top. So again, single prints. If you zoom out enough, then you'll start to see the letters. So again, A, B, C, D, E, F, G, H, I, J, K, L, M, N. The only other thing I really want you guys to focus on is going to be the M period. I need to find one where it's actually a thing. Looks like here. Yeah. So when the M period, I'm going to actually put this on auto. It's not going to be accurate, but it'll be easier for you guys to see there. Okay. So when the M period makes a new high of day or a new low of day, this would be considered a spike. And basically the spike goes from our M period all the way to the L period. So to here. And so this would be our spike at the top. And if this happens at the bottom, it's just the inverse of what I'm about to show. So this is my spike. This is my spike base. And what's this? Oh, that's my POC. And basically the way that this works is these happen at the end of the day. And what we don't know is who was in control basically when the market closes, because like they went up and they made a new high, or they went and they made a new low. And and then there was a little bit of selling, or if it's at the bottom, there was a little bit of buying, and then the market closed, and we don't know like who was in control. Was it buyers or sellers? And so the next day when the market opens, if we open below our spike base, it would be considered bearish. So it looks like the bears were in control. If we open in between our spike and our spike base, it would be considered slightly bullish, because they didn't take it below the spike base, and basically like there's a pretty good chance that the bulls are going to be in control and take it and push it higher. If we open above our spike, then pretty good chance that the bulls are in control and they're going to keep pushing it up. Okay. If I turn on, sorry, let me do this. So we ended up opening in between, and they pushed it up to the June POC, July value area low, September value area low, and then just ended up selling off from there. And then you can actually see, so this is a good example of what I was talking about, where we came below our level and then it acts as resistance, right? And actually, if I was trading this, if I took this short, this would be where I would be looking to close. Basically the June value area low. But I'm also just kind of looking at the bodies of these candles. So if I didn't have the June value area low here, I would be closing it like right at the body of those two candles. But since I do have the June value area low, that would be my target if I was taking that trade. Let me see, let me find a spike on the bottom now just to show you guys. Might be easier if I go. So here's a spike on the bottom. This here would be my spike. Oops. And the L period would be my spike base. And then basically the same thing that we were talking about. Opening below the spike would be bearish. Opening in between would be slightly bearish, and opening above would be bullish. And then you can see the New York session the next day basically opened just barely below it. We came up, retested, and then just dumped, right? Anybody have any questions about that? So basically, just to recap, oh, and I should share this. You only have access to TPO if you have the premium. Where is it? Annual, or it doesn't have to be annual, but you need to have the premium to get access to TPO. I think I want to delete that. Yeah. Oh shoot, I'm on SPY. I don't want to delete anything. Um, so basically, just to recap really quickly, if you guys are, or not if, what I want you guys to be trading off of right now is volume profile and TPO. So basically, find your single prints. Um, you don't necessarily have to have the premium. You can figure it out basically just by looking. So like for me here, I can see like this candle's basically up here by itself. This is a single print, right? And we would start from the open. This would be A, B, C, D, E, F, G, H, I, J, K, L, M, N. I think I missed something there. A, B, C, D, E, F, G, H, I, J, K, L, M. This is N. And so by finding M, you could see if there was a spike or not. Basically, that candle would have to make a new low of the day or a new high of the day. Otherwise, you know, these are going to be our single prints or single prints at the top. I guess the other thing I forgot to mention is we also want to find like our poor highs and poor lows. And so like on this day, we would have poor highs, right? So you can see the blocks on this. It might be better if I use the actual correct settings. Well, I guess according to this is a single print. But so this here would be like a poor low. If this didn't exist, this would be a poor low. We're looking for the blocks to be overlapping. Yeah. So actually this here is a poor low where we have the O and the P basically side by side. So you'd want to mark these as well. And then basically it's the same thing that we've already been talking about. When you have a poor low or a poor high, we would expect price when it revisits this to break through it and at least come a little bit lower before it bounces. Yeah, exactly. Black rose. But it's going to be, if the spike is at the top, opening in between would be more bullish than bearish. If the spike is at the bottom, opening between, the spike would be more bearish than bullish. Okay. So, excuse me. So basically when we're looking at TPO, we're looking for our poor highs like we have here. So this is a poor high. And when we have poor highs, when price comes back to it, we would expect it to break through and go a little bit higher. I always try to find where I think it'll go if we break through. And then if we have a poor low, same thing, we would expect it to break through and go lower. If we have a single prints, which would be either our strong highs or strong lows, we would expect if price comes back to there that we get a rejection, or if it's at the bottom, we would be expecting a bounce, right? And then the only other thing with TPO is going to be our spike and spike bases. So basically, really quick recap. When you guys are charting, you want to find all of your volume profile levels. So like right now, if I'm charting for Monday, I would be charting my previous week value area high, value area low, and POC. And I would also chart my previous day value area high, value area low, and POC. And then I would also want to find, do I have single prints? Do I have a poor low? Do I have a poor high? Or do I have a spike? And basically, with those things, that's what you want to be trading off of the next day. And then also the last piece of the puzzle for charting is going to be, we use our session volume profile. And if we have 2 days overlapping like we do right now, then you would draw your SIGs, right? I'm not going to go very in depth on this, but basically we draw a fixed range volume profile from the first day and go all the way to the last candle of the last day. And from there, we start with
the way to the last candle of the last day evokes a powerful sense of.
I don't know why my phone started talking. But so in this case, this would be my first SIG, value area volume 68. From here we go to value area volume 95. And then this would be my second SIG. And then from here we go to value area volume 99. And this would be my third SIG. And basically, the further we get away from, like the center of the bell curve, and this even looks like a bell curve to a degree, right? The further away we get from where the most volume is traded, the more likely we are to get a bounce or a rejection. So anytime you're coming up to like second SIGs or third SIGs, you want to start thinking reversal. Okay? So basically, again, just quick recap. The things that you want to focus on when you're trading when you're charting, your volume profile levels, TPO levels, poor highs, poor lows, single prints, top and bottom, and do you have a spike? And then if you have 2 or more days that overlap, then you can draw SIGs. If you have 2 or more weeks that overlap, you can draw weekly SIGs. If you have 2 or more months that overlap, you can draw monthly SIGs. Anybody have any questions? Nobody? I'm going to say, like, going forward, I need people to be a little bit more interactive. I mean, I don't necessarily need questions. Like, if you don't have questions, that's great. But I need people to basically join in and be open to, like reviewing the previous day, looking for setups, things like that. If you're feeling embarrassed, like, it's not a big deal if you're wrong, but by doing it, and doing it like verbally and live, it'll probably help you more, learning and so on. So we're basically like right in an hour. And again, I feel like an idiot because I didn't really record the YouTube session. But what I'm going to do is either tomorrow or Sunday, I'm basically just going to re-record exactly what I talked about. And it'll probably be more clear and concise. I don't know what was up with me tonight, but like the things weren't firing on all cylinders. Alpha's requesting to speak, so I just brought him up. Go ahead. What's up? So you unmuted, but I cannot hear you. Let me yeah, my volume's working. Doesn't look like your mic is working. You see, like when I talk, there's a green border that goes around my name. You don't have that green border, so I don't know if your mic's not working. Okay. Oh, I hear you now. Yeah. No, I wait for them to be retested generally. I mean, I have so like I have single prints up here from Monday, the 14th of April. I have single prints here from Wednesday. Actually, this was the retest, sorry. This was single prints from Friday. I don't even know why I didn't notice to show you this, but or show you guys this. This is a perfect example of what I was teaching, which is this is our single print here. You know, we went away from there when we came back and retested it. This was like the long, right, of the day was the retest of this single print here. But so now that it's been retested, I would delete it. But you kind of just like want to be always aware of that level, right? Because the next time they come to there, there's a chance that they're going to bounce again. Or even like this here, there's a chance they'll bounce the next time they come to here. But what I basically do is as price is coming down, I'll just start looking left to find, you know, like these key levels. But if that's not something you want to do, you can always just leave them on your chart. I just try to erase as many lines as I can so I don't have, you know, 500,000 lines everywhere. And I'll also delete them. So like here, this is single prints right here. But this is from back at the beginning of April. And so like as we get further away, like I'll just delete them again to clear up clutter. Even over here, like we have single prints that haven't been retested from the beginning of April. This would be like a poor high right here that was not retested. But like I said, I would just, as we're approaching those, you know, like as we're approaching like up here, I would start looking left to see where, you know, like we bounced or rejected or what have you. So hopefully that answers your question. But basically, as soon as they get retested, I take them off my chart. A lot of people chatting. Yeah, Alan, TPO is regular trading hours, not on ETH. Almighty Beardman, like, I don't really know what to say about that. Like, I look at it and, you know, like I might use my judgment a little bit. Like to me, I think if I zoom in here, this is a poor low, right? And if I use TPO with my ticks on 3, I know it's not going to be a poor low. So see this, according to this, it's a single print, and it's not. So I guess you just have to use like a little bit of judgment. I know if I put this on 5, then I think it becomes a poor low. No, it doesn't. But if I put this on the auto, then it becomes a poor low. So, yeah, you just have to use some judgment. And then also, I guess the key thing is not overthinking this, right? So if you're really listening to Shorty, you might have to listen to him a lot because this isn't something that he's going to say often. But charting is an art. It's not a science. So, like, it's not exact. And even if, like, Shorty's charting just single prints or whatever, and I'm charting just single prints, like we might have, like one of us might think something is a poor low or a poor high, and the other one thinks it's a single print, and technically neither one of us would be wrong. Like you have to use a little bit of judgment and just know that it's never going to be exact, and you're just trying to like get the best information that you can, right? And kind of just use your best judgment. Like to me, if I look at this, no questions asked, that is a poor low. And I don't care what TPO says, this is a poor low. And I would never mark it as a single print, even though TPO is saying it is, unless I use only the default settings. So, yeah, you just have to use a little bit of judgment. Okay? Anybody have any questions? So I apologize for the, I guess, not hitting or not having my microphone turned on, which is just stupid on YouTube. And yeah, I think I was just trying to do too much today. I had a really busy day. I actually was contemplating like canceling this session tonight and rescheduling it for like Saturday or Sunday, which probably would have been the better idea, because I don't know, like I'm just not feeling like myself tonight, if that makes sense. And I feel like as a result of that, like I don't feel like this was the best session anyway. But like I said, sometime this weekend I'll just re-record it and upload it to YouTube. The information is not going to be different. It might be more clear and concise, so it might be worth rewatching if you were here live. But the information is going to be the same, and really just like the focus is what you're charting to trade the next day, which is going to be our TPO, poor highs, poor lows, single prints on the top or the bottom, spikes top or bottom, and then volume profile and our SIGs. And those are really the only things that I want you guys to have on your chart. Again, you can have, volume. I guess what I'm saying is the only lines that I want you to put on your chart are the ones that I'm saying, but you can turn on VWAP. You can trade with session volume profile on. You can trade with initial balance. You can use the ABC or AB equals CD pattern if you want. And you definitely want volume. But this would be like what I trade with. And I would recommend that you guys use the same. But at least for the first, 2 months of this mentorship session, focus on just charting your SIGs, TPO, and volume profile, and trade just off of those things. We want to make it as uncomplicated as possible. And then after like 6 weeks to 2 months, once you've got that down, then we'll start adding in some more advanced stuff for you guys to start using. Romy, how are you feeling? Are you feeling like you're getting close to starting to take trades? Paging Romy. Mic off. Fibs I tend to use like anytime that I get a big move in one direction. So what day is this? Wednesday, Thursday. It might be this here. No. I'm trying to find like a good example. I guess things have been pretty volatile too. So where's our open? Here. I mean, I would draw it. Let me see. 5 minutes. This is probably actually a really good example. So like from here where we got a big sell-off, as soon as they start to bounce is where you would draw your fibs, something like this. And you would be looking to get back in at the golden pocket right here. And basically, like, this might make sense, but it's really just a bear flag. But the fibs kind of show us, like, well, a few things. If you're watching a bear flag form, you know, we talk about getting in at the top, and how do you know where the top is? Basically with your fibs, when they come to this golden pocket here is generally where you're going to want to be getting in. And then when you do that, your first target is going to be your 272 level. So this would be your trade from, I'll just pick the middle of the golden pocket to here. It's like 48 points. So that's a really quick overview. I don't want to start teaching this yet, but that's how I use it. That's how you would want to use it. And I guess, like, if you're paying attention, here's another bear flag here somewhere. And this is where you'd want to be getting in. It doesn't look like they didn't come down to their target, so this would have been a fake out, like you would get stopped out. I mean, the market closed, so you would have to close your position. You can't swing trade futures, just an FYI. I will add, I think everybody here should be trading futures, and if you're not, you should consider switching. And I'll happily, like, go over. Oh, okay. All right, no worries, Romy. I mean, we can get together and fix your mic at a later date. But yeah, I need to get you trading, and I need somebody to review their trades. It doesn't matter who, like anybody that's willing to, and it doesn't have to be the same person every day, but we should really be looking, you know, at like one person's trade and dissecting it, kind of every time we do a session. Talking about the entry, the exit, stop loss, so on and so forth. And then figuring out, like, if something was missed on the trade, or if something could have been done better, or if it was just a great trade. Romy sent me he sent me some setups the other day. Trying to see. Yeah, so like, this is a setup he sent me. This one here, where was it? This is a trade I actually took. And me and Romy talked about this. I just didn't understand why he was only targeting like 10 points or 11 points here. But we already talked about all of that. But yeah, we're going to want to start basically reviewing somebody's trade every single time we go live and just kind of dissecting it and talking about it. Talk about what could be done differently, so on and so forth. But yeah, with that said, Romy, we got to get you trading soon. And then if people are interested, I think some people might feel intimidated by futures. It's way easier than options. And I'll happily do a class like teaching futures and how to trade them. If that's something that somebody's interested in. Black Rose, it's way easier than options. Just way easier. You know, like with options, so I'm going to target you, Black Rose, and like, please don't be shy or embarrassed or whatever. But let's just say it doesn't matter what this is. We could say it's Disney, right? And you bought an option here, and your contract cost $150, and you're targeting here, and your stop loss you're going to put here. So based on your contract costing $100, where would you put your stop loss if you wanted to close when price got to 52,096? And where would you put your take profit if you want to take profit at $53,057? Yeah, but what contract price do you put in for stop loss at 52.96? I don't know if I'm not making sense, but basically what I'm saying is, if your contract costs $100 here, how much will it be worth when it comes down to here? And I guess I'll just let anybody answer, because okay, thank you. Thank you. So far, two correct answers. Alan's also typing, but I'll just go with Shelly since she typed first. It's impossible to know the contract value when price comes to here, because like my option, like let's just say I pay 150 here, and it does this. And now my option is worth $75 because theta ate up the value. right? And I didn't go lower than my entry, but theta's just destroyed my contract, right? There's no way to know how much my contract will be worth here, and there's no way to know how much my contract will be worth here without just like trying to take a guess. On futures, if I type in, or I'm really like using my mouse and clicking and dragging, but if I place my stop loss at 5,296, if 5,296 gets touched, I get stopped out. And if I put my take profit at 5,357, if 5,357 gets touched, my take profit gets filled. If I put, like if I have some information, and I know that I want to be long right here, I can put an order at 53,004, and when price touches that, it will fill me long. And then again, I just put my stop loss here, my take profit here. I could technically just get up and walk away from my computer. And as long as one of those two levels gets hit, I'll get filled, and I'll either be stopped out or my take profit will get hit. But the price on futures is the price. So like, it doesn't adjust, or basically there's no Greeks. So there's no theta decay. There's no price decay over time. The price is the true price. So whatever level I put my stop loss at, whatever level I put my take profit at, that will never move. And so like, if you're trying to do what I'm teaching, and I say like, if we come here, you want to enter long, or in terms that like option traders would understand, we would want to be in calls here, right? But as an option trader, you have to sit there and stare at the chart and wait for price to come down here. And then you have to click buy and hope that you get a good fill, right? As a future trader, I just put an order here. I just say, and I just put my order there, and I can get up and walk away from the computer. And as long as price comes to here, I'll get filled at this price. Yeah, exactly what Alan said. Options, you're guesstimating. Futures, you're trading off of the real price, the true price. Okay. And so I guess, like if going off of what I'm teaching, like if we're saying, whatever, like this here is a strong low. And based on that information, if I'm short, I want to close my trade up here before I get to this strong low, because the next time we come down here, we'll probably bounce. In this case, we didn't, but I can just put, short here, stop loss here, take profit here, and I can get up and walk away from my computer, and I'm able to trade off of levels and not off of percentages or trying to guesstimate where the contract value will be when price comes to here. So hopefully that makes sense for everybody. It sounds like I do need to do like a class on it, so I will. I'll probably not set it up as one of the mentor sessions. I'll probably just do basically a video, and I'll just stick it on YouTube, but I'll do it live. That way, if people watching have questions, they can ask questions. All right. But yeah, ideally, I think everybody here should just switch to trading futures. There's a lot of people that, like, through me talking, have switched to futures. And as soon as they do, they go, God, I should have done this a long time ago. It's just way better. It's a lot easier to trade. So all of that stuff. Anyway, I'm going to call it here. I think I went a little bit longer than I actually wanted to. I have to be up early in the morning. So again, I'm just going to re-record this sometime this weekend, and I'll re-upload it. It's going to be the same information, but hopefully just more clear and concise. Because for whatever reason, I'm a little bit off today.